Good morning, Ma'am Fanny and everyone. First of all, thank you for giving us the opportunity to present today. We are from Group 3 and we were presented about statement of cash flow. My name is Madina Insani Hakiki and my friend is
Michael Febrian Wijaya.
okay. So next. So cash flow is the statement of financial statement that present the total cash inflow and total cash outflow of a company. Cash flow statement is include cash and cash equivalents, short-term investment that are very liquid and can be readily converted to cash and have a minimal risk of value change with a maturity period of less than 3 months. And the company cash flow are classified into the three types. First one is operating cash flow. Second one is investing cash flow, and the third one is financing cash flow. Next, the benefit of cash flow. This financial statement help user obtain information about. The first one is the company ability to generate cash flow. And the second one is the company. Apa gua jelasin ya, Map?
Boleh.
Udah ntar lama.
Ulang ya, sabar. Kita kasih animation deh. Kayaknya kering banget deh ini
Kering banget ya?
PPT-nya. Bentar. Dah. Oke.
Bentar. Bentar. Ya. 2, 3. Good morning, Ma'am Fanny and everyone. First of all, thank you for giving us the opportunity to present today. We are from Group 3. We will present it about statement of cash flow. My name is Madina Insani Hakiki.
And my name is Michael Febrian Wijaya.
Okay. First of all, the definition about cash flow. Cash flow is statement is financial that present the total cash inflow and total cash outflow of a company. Cash flow statement is include cash and cash equivalents, short-term investment that are very liquid and can be readily converted to cash and have a minimal risk of value change with a maturity period of less than 3 months. A company cash flow are classified to three types. The first one is operating cash flow, and the second one is investing cash flow, and the third one is financing cash flow. Next, the benefit of cash flow. This financial statement help user obtain information about the first one is the company ability to generate cash flow. This refers to how will the company can produce cash from its operation, which is important for sustaining daily activities and future growth. And next is the company ability to meet its obligation. This is show us whether the company can pay its debt and liabilities on time and ensuring financial stability and trust from creditors. Next is explaining accounting profit and cash profit. This highlights the difference between net income or accounting profit and actual cash available or cash profit, which is help in understanding the real liquidity of the company. And the last is the effect of cash and non-cash investing and financing activities on the company financial position. This is explain us how to how both cash transaction like purchasing asset and non-cash items like the depreciation or stock issuance affect to companies' financial condition. Okay, next, cash flow from operating activities. Cash flow from operating activities are the primary revenue generating activities of the entity and other activities that are not investing or financing activities. First is inflow, receipt from the sales of goods, service, royalties, and other income, and receipt from rent income, tax refund, and last is receipt from grants or banks and sale of securities from securities company. The second one is outflows, payment of supplier of goods and service, payment to employee, payment to claim insurance, bond interest or security company, credit interest or bank, payment for operating expense. Next, reporting cash flow from operating activities. The first one is entities report using the following method. The first one is direct method and indirect method. Reporting using the direct method is accurate, more useful information, and this is better. And the last is the basis for preparing the cash flow from operating activities in the net income statement, comparative current asset, and the comparative short-term liabilities. Okay, next. Operating activities. Direct method is the method information regarding major class of gross cash received and gross cash payment can be obtained from one is the entity accounting records and by adjusting sales, cost of goods sold, and other items in the income statement. And the indirect method, the cash flow from the operating activities is determined by adjusting profit or loss for the effects of first one is change during the period in investor and operating receivable and payables, and non-cash items such as depreciation, provision, deferred tax, unrealized foreign currency gains and loss, and undistributed profits and associate. And the third one is all other items for which the cash effects are investing or financing cash flow. Okay, next. Investing cash flow are the acquisition and disposal of long-term asset and other investment that are non-cash equivalents. The main basis for the preparation is comparative non-current asset. Inflows is include the receipt from the sales of fixed asset, intangible asset, and long-term asset. Cash received from futures or forward contracts, futures and hedging, receipt from the sales of debt or equity instrument and other those held for the trading. And the for outflows is include the cash payment to accurate fixed asset, intangible asset, capitalist development cost, cash payment for features, forward swap contracts for hedging activities, and payments to accurate debt or equity instrument or venture other those held for trading.
Okay, so next one we are going to the interest and dividends. Okay, so interest and dividends, cash flows from interest and dividends must be disclosed separately and classified consistently. So for interest, interest expense can be presented as operating cash flow or financing cash flow. Interest income can be presented as operating or investing cash flow. And for dividends, dividends paid can be classified as financing or operating cash flow, and dividend income can be classified as operating or investing cash flow. So entities should apply a consistent classification policy for interest and dividends to enhance comparability between periods in accordance with PSAK 2 paragraph 33 until 34. Okay, the next one is income tax. So, for income tax, cash flows related to income taxes must be disclosed separately, classified as operating cash flow, unless specifically identifiable with financing or investing activities. If classified separately, the total amount of taxes paid must be disclosed. It is important to separate tax-related cash flows to provide a clearer picture of the company, operational efficiency, and tax burden. Okay. The next one is investments in associates, subsidiaries, and other businesses. The first one is investments are reported only in relation to cash flows between the investor and investee. Cash flows from acquisitions and disposals of subsidiaries and other businesses must be separately disclosed and classified as investing activities. Disclosure regarding acquisition or loss of control of subsidiaries and businesses. The first one is based on the total consideration. The second one is portion of consideration paid in cash or cash equivalents. The third one is cash and cash equivalents of the subsidiary when control is lost. And the last one is assets and liabilities excluding cash or cash equivalents where control is lost. So this disclosure increases transparency, helping users of financial statements assess the impact of business combinations or disposals on the entity's cash flow. Okay, the next one is reporting cash flows from investing and financing activities. It is reported separately as major classes of gross cash receipts and gross cash payments arising from investing and financing activities, except for items reported on a net basis. So, gross reporting provides more detailed information, while net reporting is permitted only in limited cases where turnover is quick, amounts are large, and maturities are short-term. Okay, the next one is reporting cash flows on a net basis. So, cash flows from operating, investing, and financing activities may be presented on a net basis when the first one is cash receipts and payments are on behalf of customers and reflects activities of the customer more than the entity's own activities. The second one is cash receipts and payments are for items with quick turnover, large amounts, and short maturities. And for the financial institution, the first one is receipts and payments must be related to deposits. The second one is placement and withdrawal of deposits from other financial institutions. The last one is purchases and repayments of loans made to customers. Reporting on a net basis simplifies the cash flow statement when detailed gross reporting would not provide additional value. Okay, the next one is cash flows in foreign currencies. The first one is cash flows arising from foreign currency transactions are recorded in the functional currency by applying the exchange rate at the date of the cash flow. The second one is cash flows of foreign subsidiaries are translated based on the exchange rate at the date of the cash flow. The third one is must be consistent with PSAK 10 or effects of changes in foreign exchange rates. Unrealized gains or losses due to exchange rate changes are not cash flows. And the last one is changes in exchange rates must be disclosed in the cash flow statement to reconcile opening and closing balances of cash and cash equivalents. So understanding foreign currency cash flows is crucial for multinational companies as it impacts liquidity management and their currency risk exposure. That's all for our presentation regarding the PSAK 207. Thank you so much for listening until the end. Uh, we're sorry if there are a mistake during our presentation. Thank you so much and goodbye.
Thank you.